You're deep in the Zillow scroll, saving dreamy kitchens and perfect porches when you find a house that you might be able to afford. The Zestimate says one thing, an online calculator says another thing, and then you ask ChatGPT, and now you have 3 different answers to the same question. How much will this house actually cost me each month? Welcome to Homebuyer University, where we break down the real cost of buying a home so you can stop guessing and start planning. I'm Steph Douglass, broker and CEO of Open House Austin. I bought my first house when I was 24 as a first-year teacher. When I was going through the process, I felt completely lost. I didn't come from money, I wasn't married, and I didn't speak the language of real estate. That's why I built this platform, to make home buying more inclusive, more transparent, and way less overwhelming. Whether you're buying solo, with a partner, or with friends, we're here to figure out what works for you. In the last video, we talked about the 3 big things that lenders care about. Now let's connect the dots between the price of a house and the monthly payment that actually fits your real life budget. Because knowing what you can afford isn't about the list price. It's about how all the hidden costs stack up in a monthly payment that you're actually comfortable with. Let's break down what's in your mortgage payment because it isn't just your loan. Your payment is really a bundle of 5 different things. First, the principal. This is the actual loan amount that you borrow. So if you buy a house for $400,000, you put $20,000 down, your principal is $380,000. Each month, a small portion of your payment goes towards this amount. Second, interest. This is the cost of borrowing money. You're paying your lender a percentage of the loan in exchange for fronting the cash. Even a small change in interest rate can shift your monthly payment a lot. For example, at a 6.5% interest rate, a $380,000 loan is about $2,400 a month. At 5.5% interest, that drops to about $2,160 a month. That's $240 a month just with a 1% drop. Third is property taxes, charged by the government based on your home's value. Lenders usually collect this monthly and then pay the whole bill when it's due. Fourth is homeowner's insurance. It's bundled monthly and protects your home from damage and liability. Fifth is PMI, private mortgage insurance. If you put less than 20% down, lenders usually require it. It protects them, not you, and ranges anywhere from $50 to $150 a month. So, how much can you actually afford to spend on a home? A good rule of thumb, keep your total housing payment around 28 to 30% of your gross monthly income. Let's say you make $75,000 a year, that's roughly $6,200 a month before taxes. 30% of that is about $1,875 per month. That $1,875 should cover your loan, your interest, your taxes, your insurance, and your PMI. If a calculator says your payment would be about $2,500 a month, that might be more than what you're comfortable with, even if a lender says you're approved. Lenders often approve you for more than what fits your lifestyle. That's why it's so important to lead with your own budget, not just what the bank says. And if you're thinking like an investor or just want to offset your costs, there's ways to do that too. One of our buyers bought a home with a back unit that they now rent for $950 a month. Their mortgage is $2,200, but with the rental income, their out-of-pocket is actually closer to $1,250. That's the kind of strategy we love to help with, especially if you're buying with friends or want to build equity without stretching your budget. In the next video, we're gonna dive deeper into PMI, what it is, why it exists, and how to work around it if you're trying to keep your monthly costs down. See you next time.